This is Nightly Business Report with Tyler Matheson and Sue Herrera.
East Coast paralysis and historic snowstorm slams one of the country's major economic arteries, disrupting business and travel along the East Coast. But it may not be a record breaker for the economy.
Major shift. Greece's anti-austerity candidate sworn in as the country's next prime minister, setting up a showdown with the country's biggest lenders. Why Greece's future matters to you.
Looking for clues. The Federal Reserve's two-day meeting begins tomorrow, and investors will be looking for any hints of when rates may start to rise. All that and more tonight on Nightly Business Report for Monday, January 26th.
And good evening, everyone. From the Mid-Atlantic to New England, 30 million Americans brace for the first blizzard, the first big one of 2015. It will bring frigid temperatures, near hurricane force winds, and snow that could top 3 feet in the hardest hit places. Millions of school children already sent home early today, be home again tomorrow, maybe throughout much of the week. 5,000 airline flights already canceled, stranding travelers from D.C. to Boston and beyond. 7,000 New York State National Guard troops have been called up. Home games tonight for the New York Knicks and the Brooklyn Nets already postponed. But given the seasons they're having, that may not be all bad. And just outside our studio doors, the snow is already piling up. And with worries growing now about the size of the storm and its disruptions, along with downed power lines, shuttered commuter railways, and impassable roads, how much damage could a major storm like this do to the U.S. economy? Steve Leisman has the details.
If it's as massive a snowstorm as what's being predicted, there will be some negative economic impact, measured in work not completed, lost hours, and lost pay. Much depends not so much on the amount of snow that falls, but over how wide an area, how quickly it's cleared, and how soon people can get back to work.
What's really important from an economic perspective as it relates to metro areas and the costs to cleaning up snow, it's more important the number of storms, not the amount of the storms. If you've got 10 storms where you've got 5 inches, that has a bigger impact than if you've got one storm with 50 inches.
Some work can be made up, some is lost forever, and yet, in the internet age, if the power lines don't go down, a lot of work gets done from home. But a single massive snowstorm, if that's all it is, and here's hoping that's the case, won't rise to the level of last year, which had both unusually cold temperatures and lots of snow that was widespread, leading to a surprise 2.1% decline in growth in the first quarter. It was so big, many doubted it could be weather-related. But growth bounced back, as did jobs, and some of the GDP in the next 2 quarters, averaging a whopping 4.8%, was a weather-induced snapback. A big part of last year's decline was the cold and snow in places that don't usually have it, like the South. But this storm, although dangerous and massive, is hitting in a place that has come to expect large storms. In fact, data for the New York City area show there have been more big snowstorms of 15 inches or more in the current 25-year period than in any quarter century since 1790. And most of those storms have happened in the past 11 years, for a major snowstorm about once every 2 years. So it's almost the rule rather than the exception. It's not a storm to be taken lightly, but as far as the economics go, New York City is tough, and so is the nation's economy. It will take a lot more than a single blizzard to cause growth to skid off the tracks. For Nightly Business Report, I'm Steve Leisman.
And according to the Insurance Information Institute, between 1994 and 2013, winter storms resulted in about $27 billion worth of insured losses. That's more than $1 billion a year on average.
Despite the blizzard, stocks will continue to trade on Tuesday. The owners of the New York Stock Exchange and the NASDAQ both say that their exchanges will be open for regular business hours tomorrow.
Well, it may be business as usual on the exchanges, but it won't be for the operators of planes, trains, and automobile and bus services. Rail systems are shutting down, thousands of flights already canceled, as we mentioned, and the ripple effects will be felt for most of the week and all across the country. Kate Rogers has more now from New York City's LaGuardia Airport.
Well, snow is falling all around us at LaGuardia Airport this evening, and both airlines and airports are taking Winter Storm Juno's threat very seriously. FlightAware.com reports that as of this evening, more than 6,300 flights have been completely canceled between today and tomorrow. Boston Logan Airport also the only one so far to completely suspend service as of 7 p.m. tonight, continuing into tomorrow, Tuesday, and hoping to have things back up and running on Wednesday. Also, United and American Airlines completely suspending service tomorrow to northeast area airports, including LaGuardia, where we are, JFK, Boston, Philadelphia, and Newark airports. But the passengers and travelers we caught up with here today arrived hours early, hoping to beat the storm.
We changed to an earlier flight.
I'm a little concerned that, if this does live up to the hype, that things won't be clear in time and I'll get stuck in Columbus for the weekend.
Now, we've been watching the boards behind me turn redder and redder throughout the day with those cancellations. So the natural question here is what this all means for the airlines. Experts say you can expect revenues to take somewhat of a hit throughout the next several days, but don't expect earnings to be that greatly impacted. Now, that's because airlines, they do plan and budget for these types of major storms in their fourth quarters and first quarters of each year. And so far this season, Winter Storm Juno has been the only major storm to hit. At LaGuardia Airport, for Nightly Business Report, I'm Kate Rogers.
The blizzard is also having a big impact on bond sales. The U.S. Treasury rescheduled some government debt auctions slated for today, while postponing the sale of nearly $300 million worth of municipal bonds. The bond markets are expected to be open on their usual schedule tomorrow.
A few feet of snow is expected to have a big impact on retail and restaurant sales. Citigroup estimates that the blizzard could cause total U.S. retail traffic to fall between 2% and 4% this week. Individual retailers like Home Depot, Lowe's, Tractor Supply, well, they're expected to see big sales gains, but a number of other retailers, fast food chains, casual dining outfits, they should see comp sales fall.
On Wall Street today, stocks hovered between small gains and losses, getting a lift from a handful of corporate mergers, despite worries about some election results in Greece, and we'll talk more about that in just a moment. At the close, the Dow was up 6 points, the Nasdaq was up 13, and the S&P added 5 points. In the energy markets, both domestic crude and Brent ended lower, even after an OPEC official said the market may have bottomed out.
Some encouraging economic news from Washington. The Congressional Budget Office now predicts the 2015 federal budget deficit will be $468 billion, which would be the lowest since President Obama took office. The CBO is also forecasting U.S. economic growth of 2.9% in fiscal 2015 and low inflation for the next few years.
And Ty, some good news from business owners today. A new survey from the National Association for Business Economics found that many companies are optimistic that continued improvements in business conditions will result in more hiring and higher wages. And more than half of owners say their businesses or industries will benefit from the sharp drop in energy prices.
Well, moving overseas now with economic reverberations coming out of Russia and Greece. Ratings agency S&P has cut Russia's sovereign credit rating to junk status. That sent the ruble tumbling another 5% today against the U.S. dollar. And with the election of a far-left anti-austerity party in Greece, that nation's credit rating could be in the crosshairs ahead of a scheduled reassessment in March.
With a radical leftist elected as the new prime minister of Greece, it's setting the stage for a showdown with that nation's biggest lenders, who have lent the struggling economy hundreds of billions of dollars. And that's got investors worried about the stability of the entire European economy and the future of the euro currency. Michelle Caruso-Cabrera has more now from Athens.
In his acceptance speech last night, Alexis Tsipras, leader of the Syriza party, told his followers the painful austerity measures of the last 5 years, the severe budget cuts and the much higher taxes are over.
Greek people will regain social cohesion and dignity. And the message is that our common future in Europe is not the future of austerity. It's the future of democracy, solidarity and cooperation.
But Greece's international creditors, the International Monetary Fund, the European Union and the European Central Bank, which have lent the country more than $200 billion, don't necessarily agree with Tsipras's prescription for Greece. Dr. Alexander Kritikos is with a German think tank.
More or less everything he said is bad for the economy, either increasing public spending, either making public investments, either saying we increase the number of public servants or increasing the minimum wage.
This country is still dependent on billions of dollars of bailout money this year. And if Tsipras tries to enact those policies, it's possible that his lenders could cut the country off. That would lead to a collapse of the banks and a likely exit from the common currency, the euro. Tsipras' economic advisor, Dr. John Milios, a Marxist economist and professor, doesn't believe they would risk it.
No one wants a collapse of banks in the Eurozone. This is going to be Lehman Brothers to the square or to the 10th. No one wants to destroy or to jeopardize the future of the Eurozone.
Tsipras' election comes just as Greece is finally emerging from a 5-year depression in which the economy plummeted more than 25%. The business community is desperate for improvement.
What I expect from the new government is to leave me alone, do my job, and tell me the rules from the beginning.
Areti Georgili says the government's regulations are punishing, and even worse, they change all the time.
Nobody can foresee, nobody can do a business plan, nobody can budget, and nobody can invest or operate.
It's an environment that needs to improve if the country is ever going to recover economically. Nightly Business Report, Michelle Caruso Cabrera, Athens, Greece.
So how will the future of Europe affect U.S. monetary policy when the Federal Reserve begins its two-day policy meeting tomorrow? Let's find out from a guy who's been there, Robert McTeer, former president of the Dallas Federal Reserve. Bob, welcome back to Nightly Business. How's the weather in Dallas? Is it good?
70 degrees and sunny.
Oh. All right. Well, you know, in New York, it's all about New Yorkers. I'd love to be there. Why, in a phrase or two, does Europe, Greece, and the euro matter to individual U.S. investors? Why should we care?
Well, in a way, we shouldn't. Greece is a very small part of the Eurozone, and we're not as dependent on international trade as a lot of countries. On the other hand, to the extent that their problems affect the price of the euro in terms of dollars, it would continue to cause an unhelpful increase in the strength of the dollar. Strong dollar is very good for a country that's not fighting recession and low and high unemployment, but everybody has devalued against the dollar, and it's time for it to come to an end, I think.
So, Bob, does the situation in Greece, the strength of the U.S. dollar, affect our monetary policy here at home? With the Fed meeting this week, do you expect any changes due to the situation in Europe, in Greece?
Well, to begin with, they weren't going to contemplate changing policy until the middle of the year anyway, so it won't affect anything now. If similar things are going on, though, in the middle of the year, I suspect it will delay the Fed's beginning of normalization of interest rates. Already, what's been going on over there has pushed our rates down instead of up, and our rates are still considerably higher than European rates, which are negative in many cases on the short end of the yield curve. So we're getting headwinds from a weaker euro and tailwinds, unwanted tailwinds, probably from interest rate arbitrage.
The stronger dollar means that American companies might not export as much as they otherwise would to Europe, and a weaker euro means that European imported goods cost less. So that's exactly what the Fed doesn't want: low inflation and an economic situation where there is that headwind right on the bow.
You're exactly right. In normal times, those things would be good things: lower inflation, cheaper import prices. But in normal times, lower oil prices is good too. But we got a little too much of that too fast, and this feels similar, and they're happening at the same time. It's a little bit scary.
All right, Bob. Thank you so much for helping us through it tonight. We appreciate it. Robert McTeer.
Thank you.
Robert McTeer, former president of the Dallas Federal Reserve.
Coming up, as Microsoft reports a drop in profits, there's one business unit that is getting investors' attention. More earnings for you now. After the closing bell, we heard from software company Microsoft, which saw profits fall on a strong U.S. dollar and weaker demand for personal computers, which hurt sales of its Windows software. Earnings of 71 cents a share, excluding certain items, was right in line with Wall Street forecasts. Revenues of more than $26 billion were just a slight beat. Shares were initially lower in after-hours trading. So Bertha Coombs joins us now from the NASDAQ exchange with her one big takeaway from Mr. Softy's results. Hi, Bertha.
Hi, Sue. You know, for Satya Nadella, there's been a bit of a romance. He's coming up on his one-year anniversary after having taken the helm as CEO of Microsoft. So he still has that new CEO smell. There were some good things in this report. You've got record sales of their Lumia phone, albeit at lower prices. You also have strong sales of the Surface Pro. They really hadn't gotten much traction with that piece of hardware. That's starting to improve. And the cloud area also once again showing doubling of revenues year over year. The big question now is how that can all translate to real momentum on the bottom line. And that's going to be critical for Mr. Nadella to maintain that romance with Wall Street.
Bertha, thank you very much. Bertha Coombs at the NASDAQ market site.
Well, Microsoft is not just about computer software, as you may well know. There's the Surface tablet that Bertha just mentioned, the handset business it bought from Nokia, its Bing internet search engine, and the growing popularity of its Xbox video game system. Big in my house, I can tell you. So how much does gaming mean to Microsoft? Josh Lipton takes a look.
The experiences from productivity to gaming, how Spartan and the browser comes together, how Xbox Live comes together.
Microsoft CEO Satya Nadella is passionate about cloud services and mobile technology, but he's also very excited about video games. That commitment is easy to understand given the size of this industry, which is now worth some $100 billion, according to analysts at Gartner. So Nadella is working hard to win over fans for Microsoft's Xbox One. Microsoft slashed the price of that video game console from $500 to $350, which had a big impact. For both November and December, Microsoft says that the Xbox One was the best-selling console in the U.S. The question for Microsoft investors, though, is how exactly a video game console fits into Nadella's broader strategy of what he calls a cloud and mobile-first world. Analysts say Nadella is still trying to figure that out.
What I think is going on right now is a reassessment of exactly where Xbox fits strategically. They just can't pull a plug on it tomorrow because they've got a huge installed base of people, and also most of the Xbox folks have Windows PCs as well.
Xbox Select.
But while the Xbox might be under strategic review, the product continues to offer the company a lot of benefits. Importantly, it's a big hit among young consumers. Analysts at research firm IDC say that Microsoft is closing the gap with its rival Sony, which says it sold nearly 19 million of its consoles through early January. That means Microsoft has the chance to cross-sell that many more of its products and services to millions of new fans. Still, the Xbox business also faces real challenges. Analysts at Nomura estimate that after accounting for sales and marketing, Microsoft is actually losing money on Xbox. Microsoft declined to comment about that analysis. So it's now up to Nadella to prove to his investors that gaming isn't just an important source of entertainment, but a business division that makes both strategic and financial sense for Microsoft's future. For Nightly Business Report, I'm Josh Lipton in Silicon Valley.
United Technologies moved its earnings report to today because of the storm, and investors were not impressed. That's where we begin tonight's market focus. The industrial conglomerate's earnings were in line, but revenue missed estimates. It also gave a downbeat profit and sales outlook, citing the negative effects of a stronger dollar and pension discount rate headwinds. Shares initially dropped after the bell. Before the close, the stock fell 1% to $118.75. Texas Instruments also failed to wow investors with its after-hours report. Fourth quarter results matched estimates, and its guidance for the current quarter was also in line. Shares were volatile after the release. Before the close, shares were off by just a penny to close at 55.05. And D.R. Horton saw its revenues jump as it delivered more homes in the first quarter. On that, the home builders' results beat on both the top and the bottom lines. Shares popped by 5.5% to $24.38.
The big railroad soon. Norfolk Southern's revenue fell on lower coal shipments. Rail operators' profits did manage to top estimates, and it expects solid U.S. economic growth to help business in 2015. But it still doesn't know what the overall impact of lower energy prices will be on its business. Shares were up 1% today at 106.11. MeadWestvaco and Rock-Tenn will combine in a deal that will create a company worth about $16 billion in annual sales. MeadWestvaco's shareholders will get stock in the new company, and Rock-Tenn will have a choice of either cash or stock. Shares of MeadWestvaco up 14% today to $51.35. Rock-Tenn 6% higher. It finished at $66.85. And how about Mattel? Shares tumbling there after its CEO stepped down, and the company warned that sales during the holiday season won't measure up. Barbie just ain't what she used to be. One of the toy maker's longtime board members is going to step up as interim CEO. Shares of Mattel down 5% to $26.64.
Well, there's a new kind of space race heating up. This one is to be the first corporation to build a manned capsule to take NASA astronauts to the space station. But this competition has a bit of a twist. Jane Wells has more.
The latest space race does not pit America against the world. It pits company against company. Both SpaceX and Boeing are competing to build a capsule capable of carrying American astronauts to the space station so NASA can stop paying the Russians $70 million a seat and instead pay $58 million.
You've heard me say it over and over and over. I don't ever want to have to write another check to Roscosmos.
Boeing and SpaceX, frenemies, if you will, joined NASA to unveil details of their progress on building this first human space taxi since the shuttle retired.
You've heard both of them say they think they'll be flying by 2017. If we can make that date, I'm a happy camper.
Boeing has gotten the lion's share of development money so far for its capsule, over $4 billion. For the capsule being developed by SpaceX, the company has received $2.6 billion.
Having two options may serve NASA well, providing backup in case one company has problems. And that is exactly what has happened with the cargo contracts to the space station, split between SpaceX and Orbital Sciences, until Orbital Sciences' rocket blew up last fall.
And liftoff.
NASA has farmed out space station trips to the private sector so it can focus more of its money on getting to Mars with programs like Orion. But SpaceX also wants to go to Mars.
I think it's going to take a village, frankly, to get to Mars.
A half-century after Apollo, spending on space, both public and private, has gone into a higher orbit.
So never before in the history of human spaceflight has there been so much going on all at once.
And as much as these two companies are rivals, they're also partners. Later this year, a new docking unit will be shipped to the space station, built by Boeing, delivered by SpaceX. For Nightly Business Report, I'm Jane Wells.
And coming up, the technology being developed that will help keep your eyes on the road.
Some good news for drivers. Gas prices have now fallen to their lowest price since April of 2009. The Lundberg survey says regular gas is now averaging just $2.07 a gallon nationwide.
And finally tonight, what if your car watched you drive and warned you when an accident was about to happen? Don't laugh, the technology has been developed and will soon be found in many vehicles. Phil LeBeau has an exclusive look now at the company that's watching your eyes to make sure they're watching what they ought to.
Despite repeated warnings about the dangers of texting and driving or being distracted behind the wheel, a lot of us are not paying attention. Data from 2012 shows more than 3,300 people were killed in distracted driving accidents. So tech firms are looking to warn drivers as soon as they look away from the road.
If your eyes are looking away from the road, the vehicle will understand that you're paying attention somewhere else apart from the road ahead.
Nick Langdale-Smith took us for a ride to show us how SeeingMachines.com uses a camera in the dashboard to watch what drivers are watching. And when they're not for even a few seconds, or if they start to doze off, the car will immediately warn the driver.
The vehicle then has an understanding of whether I'm paying attention or not. When I'm coming up to this stoplight, have I seen the stoplight? Have I seen these vehicles in front of me? And that's something that the vehicle can then adjust itself to make better decisions on my behalf, safer decisions.
Eye monitoring is the next phase of driver assist technology, systems that will soon allow vehicles to steer themselves on the highway or even in city traffic. Almost every automaker is developing this technology, but most expect regulators to approve autopilot systems if drivers agree to pay attention behind the wheel, even if they're not holding the wheel.
We still need the driver along this evolution of technology to really be in the loop and to be paying attention to what's happening on the road.
Watching drivers and recording their attention or inattention could change accident investigations in the future. SeeingMachines.com is already working with several automakers, and we could see its cameras in dashboards within the next couple of years, making sure you are truly keeping your eyes on the road. Phil LeBeau, Nightly Business Report, Chicago.
Phil LeBeau not keeping his eyes on the road right there, right? That machine should make his eyes turn green. Like
it should, and he should keep his eyes on the road, Phil. All right, that does it for us for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
And I'm Tyler Matheson. Have a great and warm evening tonight. We'll hope to see you back here tomorrow night. We can get here.
We will. We will.